Hey everybody, welcome back to the channel. Jeremy Lefebvre, Financial Education, definitely saying his name wrong. I'm sorry for that. But Jeremy just did a reaction to one of the videos that I put out on his channel. And it's pretty cool because he has like 700,000 subscribers and I have like 9,000. So it's kind of cool to like see him, like to put our video on that channel in front of those many people. So far, 53,343 people have seen it, which is pretty dope. So thank you to Jeremy for showing that video. But I did a video with Sachin Sharma, who's a good friend of mine, on our podcast that we do weekly talking about Palantir. And Sachin has recently gone all in on Palantir. Now, all in meaning all of his public equity, which is about 101% of his cash plus 1% of margin, is into Palantir. That's 25% of his entire net worth. He has 75% in other private investments. But 100% of your public equity being all into one stock is pretty risky. It's pretty dangerous. And to be honest, for a lot of people, it is pretty irresponsible. Sachin walked through why he made that decision. And it was obviously eye-catching to Jeremy to get his attention because he really wanted to know why would someone actually make this decision to put all their money into Palantir. Now, he did a full analysis to it. I'll leave the video in the description, but what I want to talk about is the stuff he talks about at the end of the video, because he gives his overall thoughts and his overall thesis for what this move actually means. And I think it's a really, really interesting thing to analyze how Jeremy conceptualized someone putting all of their public equity into one stock. And one of the unique points Jeremy brings up is the nature of a shareholder class for a particular stock actually being committed to that stock. You see, because it's very difficult to have a group of shareholders that are going to buy the stock and hold the stock. It's really easy to say, oh, I'm going to buy a 10, and when it goes to 20, you're up 100% on your gain. Let's say you bought 1,000 shares, you're up $10,000. You're like, well, that's a $10,000 profit. Most people in that position, if they don't have the level of conviction that is necessary to actually hold a position and see it 10x, 20x over the next 8-10 years, would take that money. And you can't blame them. It's $10,000. So developing a shareholder base that is ready to go all in into a stock, and on top of that have margin, and do a weekly podcast about it, and make content about it, that means that there's a growing community that actually cares about the stock and the company, and more importantly, the company over the stock. The stock is important because like our money's involved, but the company, what they're doing, the daily news, the events, the things that are happening, defending the company when people say that the company is bad, when people go on CNBC and spit absolute garbage nonsense about the company, that's when you need a shareholder class that is actually ready to defend a company in a meaningful way. And what Sachin did basically showed Jeremy that Palantir is starting to develop that shareholder class, and he kind of compares it to another shareholder class that's doing pretty well on their gains. So let's get into the video. I'm going to react to him reacting to me, a little bit of a reaction inception, and we're going to analyze his thoughts. Now, before we get into the video, just want to announce real quick, I just launched an exclusive Patreon and Discord. I hate selling things. I never ask people to like and subscribe to these videos, but I put out a video that's about 10 minutes explaining why I'm doing this. It's $5 a month. It helps support the channel. It helps keep the channel sustainable, and it allows me to really go into Palantir due diligence, investing, stocks, and finance full time as a result of your support. So if you've got any value from the channel, if you've ever liked it, if you ever enjoyed the content, and you want to enjoy the exclusive Discord, definitely check it out. Link in the description.
Okay, so obviously we talked about kind of the risk appetite and how every single person is different, right? Last point I want to make, guys like that, my gosh, if I think about the type of shareholder base I want in a stock, if I'm involved in that stock, it's those type of people, right, that are putting their entire stock accounts into this one stock because they have that ultra belief in this company. And those people aren't going to sell. That's the thing. Like in a lot of stocks, what you get a lot of weak hands in stocks, right? Where people will buy in a little bit here and there, whether it's funds, whether it's institutional money, whether it's, individual investors, they'll buy a little bit of shares. But as soon as things get a little shaky, the stock price starts dropping, they miss numbers, something like that. People are real fast out of those stocks. I can tell you, guys like that guy, and the other guy as well, the Cameron guy, those guys aren't getting out of this stock. Like if they miss some quarterly metric next quarter, they're not selling out of that stock.
That's the key point here. That's really important to understand. Guys like me, Sachin, Cameron, he was another guy on the podcast, a good Twitter friend. He's about 80% of his net worth in Palantir. We're not leaving this company if they miss a bad earnings or if they miss an EPS or anything like that. Like and Q4 numbers I thought were phenomenal, right? Growing 41% year over year. I mean, like added 34 net new customers, government revenue up 47%. Like it was pretty good, but they missed on earnings. Why did they miss on earnings? Because some of the SPACs are getting hammered right now, and they had to realize some of those losses, so that kind of affected their earnings per share. So it's just like, all right, I know the growth trajectory of the company. I know why they're going into SPACs. I'm coming up with another video soon from that same podcast where we really debunk this entire myth around Palantir SPACs, because it honestly is a lot of FUD, and it's actually a very strategic thing that they're doing. So it's like, if Wall Street doesn't get that and the algorithms that manage the Wall Street hedge funds don't get when you have an earnings miss, that's their problem. I understand, because I'm a shareholder of the company that believes in the company, why they missed this metric and what that missing that metric actually means. As a result of that, I'm not leaving the stock. I'm not selling out of my shares because they miss in earnings. Not only because I'm down a lot of money and it's bad to realize a loss, but because I think even if it goes down more, which it did on earnings because of that EPS miss, that doesn't faze me. That doesn't hurt me. That doesn't keep me up at night because I know that's not the overall story of the company. And that is the key thesis when you're investing in a company and you're trying to develop a shareholder base that actually is ready to hold the stock. And this is what management for a company has to be able to do, because when you're communicating with the public, you're trying to get the public to realize, hey, there is a story here. When Elon was talking about Tesla, there is a story here, and Wall Street's not going to get it. They're going to think we're buying subsidies from the government to remain profitable. They're going to think we can't actually expand our electric cars. They're going to think there's not demand for EVs. They're going to think a lot of things that are going to make their numbers and their analysts and their reports seem like they make sense. But if you're a shareholder of this company, you've got to believe in what we're doing for the long term, and he delivered. And Tesla delivered for those early folks. Not even early. I mean, if you joined 2020 at $300, boom, 5,000 like in 1 year. It's absolutely insane. I'm not saying that's going to happen here, and it doesn't need to happen here to make astronomical amounts of gains. But what does need to happen is developing a cult-like following, not in a negative sense, but in a community sense that recognizes the growth potential of something, is able to defend it, and not sell out just because they miss a number on earnings.
As it goes up over time, guess what? They're also not going to sell that stock anytime soon, because the way, folks like that think, that have gone so heavy into a stock, is they're in that for the massive upside over the coming years. So if Palantir goes from $10 to $20, they're not cashing out at 20 because they believe it's going to 60, 80, $100+ over the coming years. And so you get this kind of beautiful shareholder base, and that's something that Tesla really built out, right? And the Tesla community really built out a strong shareholder base where people weren't just excited to make that first 10, 20, 30% on the stock. And as it went up hundreds of percent, thousands of percent, what ended up happening was you just found more and more folks that came into that stock who really believed in it for the long term. And that frustrates some people, because some people look at the stock and they're like, it shouldn't be trading at this price to sales ratio and this PE ratio and things like that. Should be trading at this. And it's like, if you just have a lot of shareholders who always consistently want to buy the stock and don't care about selling it because they believe where the company's going over the next 5, 10, 15, 20 years, then that's what you get. And you're always going to have a stock that trades at a huge premium versus where the market's at or where their competitors are at, okay?
That's an important point. Jeremy is in Tesla. And he was in Tesla, I believe, 2016, 2017. So he knows what it feels like to be part of a shareholder community that is actually going to buy the stock and keep buying it, not just because it goes up 10, 20, 30%, because they believe it can go up thousands of percent. And when it goes up those hundreds of thousands of percent, then you have Wall Street analysts saying there's no reason this should be happening. But you have a shareholder base of people that are like, screw you, it's happening. And it's not this whole pump AMC, Dogecoin type of nonsense stuff. It's like that stuff is, I think, a little bit more, maybe there's a story there. I don't mean to offend anyone who's in those assets, but it's not really a story that's necessarily connected with growth potential. With Tesla, there's massive growth potential. And Jeremy saw that in 2017. He was like, oh my goodness, this is going to grow. Wall Street can say whatever they want. When I believe that electric vehicles are going to grow and they're going to grow at such a substantial level, I'm not going to sell for 30%. As a result, as it goes up, what happens? FOMO. If Palantir went to $25 tomorrow, you're going to see a lot more shareholders, because when it goes from 11 to 25, over 100% gain, let's say it even happens in the next 2 months, more and more people get excited about what's going on, even if they don't fully know about it. And once those people get excited, what do? They check out channels like mine, like Sachin, like Chris Patel, like CodeStrap. They start viewing content about the company. They start getting educated about the company. The benefit to us is, hey, we were here early making that content because we knew what this company was. For the new people getting in 2019, 2020 into Tesla, and they started consuming Dave Lee and Rob Maurer and Meet Kevin and Jeremy, they started realizing, oh, this Tesla thing is actually real. There's a real community behind it. I want to be part of that community, and I want those exponential gains as well. So guess what? I'm not selling. I'm going to stay, right? And I'm going to be here. And as a result of that, that stock is able to have a really strong foundation, to the point where even now, post-split, it's at $4,000, and analysts on Wall Street think it should be like $100 pre-split. Like, that's how insane the level of community is behind it. You don't need that level of insanity of a community for a stock like Palantir to do well, but you need some of it. And I think if you have some of that plus good growth and more institutional buying, then you have a perfect mix for a stock that I believe is truly at the bottom. Could it go to $7, $8? Sure, but it's really hammered right now to start having those meteoric rises over the next 5, 6, 7 years. But building that community is important, and it's a risk, but it's fun to be here in the early beginnings when we're trying to build that community.
So, that's the type of shareholders I would like, in stocks that I'm invested in. So hope you guys enjoyed this video. As always,
All right, that was all of his thoughts. Thank you guys for watching. Let me know your thoughts in the comments as well. What do you think about the Palantir community? How do you think it's going to grow? And also, what do you feel about Sachin going all in 102% of his public portfolio into Palantir? I'll leave that video in the description. Definitely check it out. It was a great conversation we had. And I'll leave Sachin's YouTube in the description as well. Please subscribe to him and check out his channel because he's making a lot of amazing quality content on Palantir. He's been investing for about 25 years. The guy really knows what he's doing, and he's taking a bet. And I'm happy to see him take that bet and see where the community goes over the next 5-6 years. Thank you guys for watching. Looking forward to reading comments. I'll see you in the next one.